Good evening and welcome to the Gold Goats and Guns Hour here on YouTube and DLive. My name is Tom Luongo. It is Friday, September 13th, 2019. I want to talk about some of that now that I've got everything stopped and set up and properly going. We'll sit and chat for a minute. But tonight we're going to talk about something a little odd, a little technical, a little whatever. It's what I wrote about today, so it's what we're going to talk about today. And then, of course, we'll open it up for questions and comments later on. So tonight we're going to talk about what I think is coming down the pike. And this is actually something that hit me yesterday. And it's an idea and a thought that could easily, that I couldn't have predicted, to be honest with you. Honestly, I should have seen, sort of seen coming, but when I looked at the headlines yesterday, it became very obvious to me what the narrative is going to wind up looking like now that we're here, because it just happened. It's one of those things where if these two events hadn't happened at the same time, I probably wouldn't have connected them. What am I talking about? I'm talking about the interest rate decisions yesterday by Mario Draghi at the ECB and President Erdgoan of Turkey. Now, for those of you who don't know, Erdgoan took over the Turkish central bank sometime last year or earlier this year, at some point in the recent past, because his central bank he was angry with the central bank. Now, that story is we never get the whole story about that, and everybody's knee-jerk reaction to it, certainly on Zero Hedge and other places, that, well, this is just more of Erdogan being Erdogan, and his regime is in trouble, and the economy is on the brink of collapse, and all of this stuff, and so he's just lashing out however he can. Politically, he was having trouble holding on to Istanbul, that kind of thing, right? So politically, his position was beginning to become tenuous at an electoral level, and therefore, needed to make some big change, big move, or whatever. This is kind of the background to that. Since the lira began to undergo a currency crisis last fall, this time last year, it had been one bad news worth of event, one bad event after another, culminating, of course, with Erdogan taking over the Central Bank of Turkey. I don't remember the name of it off the top. I think it's the Bank of Turkey. So this is important to understand that the central banker, the head of the Turkish central bank, is now the president. And he's able to get away with this because he passed through parliament a whole range of sweeping new powers, which gave, the president unprecedented power now to unilaterally make these changes when he needs to. And a lot of this is all in Turkey is downstream of the coup attempt that happened against Erdogan back in 2016, if you remember. Now, I've talked about this many, many times in the past. I can't refer to specific live streams I've done on this or videos I've done on, but I've talked about it extensively over my blog over tomluongo.me. I've talked about it extensively over articles I've written for strategicculture.com as well. That this is my take to review the history here on Erdogan and Turkey and the change in the relationship between Turkey and the United States since the moment Russia began its military intervention in Syria back in October of 2015. It's now going on for almost 4 years now. But understand that these events are all connected, and that they have to be connected. From the moment Russia intervened in Syria, it began to expose the rotten nature of the invasion of Syria by foreign forces, namely the United States, Israel, Turkey, Qatar, Saudi Arabia, and others backing quote-unquote moderate rebels and allowing the rise of ISIS to overthrow the the government of Bashar al-Assad, who we had targeted for many years for termination. The minute the Russians came in, it began to unravel and began to very quickly unravel the narrative surrounding Syria, why ISIS was inevitably going to take over and all of this stuff. The Russians immediately started an air campaign that was monumental and immediately changed the tide, turned the tide of the battle. And it began to expose the complicity of all of these countries, all of these actors who had conspired to destroy Syria. I mean, behind the scenes, we're talking about the French and the Germans and the British as well. So, but this has been going on. It started there. And then it came out in late October 2015 that ISIS was smuggling oil across Syria in pickup trucks and convoys of trucks across Syria, and was being exported out to Turkey. And Erdogan's son was the one running the operation. Less than a week later, Erdogan shoots down a Russian Su-24 that quote unquote violated Turkish airspace for something like 30 seconds. That was supposed to get Russia and Turkey into a war with one another, by the way. That was an operation. That was an operation carried out of Incirlik, where our people were stationed. 8 months after that, there's a coup attempt against Erdogan. Run out of, again, Incirlik. He has to hide in Iran. He is tipped off to the coup by Putin. So, and yet somehow he stays in power. And because of these things, he stays in power. After that, Erdogan goes on a freaking rampage and a purging dissidents, journalists, military advisors, people, generals, the whole 9 yards, because they have been outed in this coup attempt as to who is actually working against it. Crushes all of it. Of course, he's portrayed as a dictator and a horrible person here, because because this is what we do. We embed the CIA in these countries as journalists, and then when they're outed, we cry press freedom. It's all horseshit. They do the same thing in Russia all the time. Okay, same thing all over the world, to be honest with you. So that's part of the background story. Now, from there, U.S.-Turkish relations collapse over time. They get worse under Trump because Turkey realized very quickly, Erdogan realized right after the Su-24 incident, that he was being set up to be the scapegoat for the rise of ISIS. And he started back-channel communications between him and Bashar Assad, who he's not a big fan of. They're not big fans of each other, but that started multiple rumors that they were talking to each other. Okay. And Turkey blocked the resupply of the rebels in Aleppo during the 2016 presidential campaign. Normally, they've been getting resupplied across the Turkish border, coming down from Azaz. That didn't happen. The Russians and the Syrian army were able to lay siege to Aleppo and eventually break the city down, and that was the beginning of the end of the first stage of reclaiming Syria for Syria. Okay? So that's... And I chronicle all this. You guys can go read my blog from 2017. I talk about every bit of this in these terms, and nothing has changed since then. And nothing has happened that has contradicted those calls and those interpretations of events back then. So today, what does this have to do with today? Why am I going all the way back to 2015? Because it's important for you to understand the context and the history, so that when we get to the moment of there's a currency crisis that comes up out of the blue, the minute Trump starts going ballistic on Turkey for not buying into his plans in Syria, somehow all of a sudden this terrible situation in Turkey that's been going on for a while, an incredible current account deficit and a rise of synthetic short against the dollar in the form of corporate dollar denominated debt, and all of this has all been going on for a long time. But somehow Turkish lira mildly depreciating here and there over the course of a couple of years. I remember when the Turkish lira traded at 1.8 to the dollar back in 2013. Today it trades at 5.6 and went through a high of 7.1. So all of these things. So the currency crisis in Turkey was a direct assault on Erdogan's presidency. It was a regime change attempt, because they didn't have the boots on the ground anymore to do a color revolution, because Erdogan got rid of all those people. No color revolution was possible in Turkey because Erdogan got rid of everybody. He jailed everybody and killed everybody. I mean, that's what happened. So no Hong Kong, no Kiev, no, not happening. So the best they could do then was a hybrid war attack against the Turkish lira. Rightly so. It's not like the lira didn't deserve this, right? It wasn't like Erdogan didn't take advantage of cheap dollars and go through a debt-fueled expansion to consolidate his own political powers. It's not like Erdogan didn't get any gibs here, guys. Of course he did. Okay, but understand that part of the decade-long of ZERP and NERP, zero interest rate policy and negative interest rate policy in the West, with yield-starved European banks hungry for Turkish corporate debt trading at a 6%, paying 6 to 8% in dollars. Come on, man. Who wouldn't do it? Right? And they built up 230 plus billion of this crap. And eventually the chickens would come home to roost. So at some point, there was always going to be a run on the Turkish lira. Now, of course, that run could happen slowly or it could happen all at once. Well, if it's geopolitically advantageous to try and destroy the current government who you're unhappy with, then you foment a crisis. And it's very easy to foment a crisis like that in the Forex markets. Come on. Like, it's not like the US dollar, Turkish lira Forex market is an incredibly deep one that would take hundreds of billions of dollars to move. No. Couple $1,000,000 here or there, boom. Get it done. Couple tens of $1 million, 20, 50, $100 million, boom, get it done. Not hard. You can get that money from the Fed on the discount window in like no time. Enough money to destroy the Turkish lira. Look, dude, if you charted the Fed's balance sheet like I do every week, and you look at the changes in the access to the reverse repo facilities and everything else, you go, oh my God, this is like, they move hundreds of billions of dollars around every freaking week, for Christ's sake. It's not a big deal. They could hide it in no time flat and bomb the Turkish lira and change a government, and no one would even notice. So the lira currency crisis, I think, was, an engineered feat, an engineered thing of a condition that was just laying dormant, waiting for an opportune time to use it to its maximal effect. Okay? It was always gonna happen. It could have happened slowly over time. The lira had been devaluing kind of steadily for the previous number of years because traders are looking at the situation going, dude, look at this current account, look at the trade, it's a mess. But remember, Turkey doesn't have a whole lot of governmental debt. Very similar to Russia. It's only got about 30% debt to GDP ratio, which is, it's not as good as Russia. Russia's like 13 or 14%, something ridiculously low. But Turkey's problem was similar to Russia's in 2014, 2015, in that it was a ridiculous amount of dollar-denominated corporate debt. And all they had to do was take access to dollars away from the market, which is what they had to do with Russia. Russia's fiscal position was so strong, we not only had to create a run on the ruble by trashing oil prices, but We also had to sanction Russian companies from having access to dollar funding markets. There was only one way to take the Russian government down, and it didn't work. And that was they had to do everything. And they had to make it such that the Russians couldn't get access to dollars to deal with the debt and pay off the creditors and everything else. Because what happened, because the important part about this dollar-denominated debt is that at the moment of crisis, it can't be rolled over. If the country in question loses access to dollar funding markets through sanctions, then when the bond comes due, it can't be rolled over at current interest rates. So, for example, I got a business. I need some capital, so I float a bond. And the way corporate bonds work are very simple. So for the next 5 years, I'm going to pay you, a 5% a year coupon on that bond. At the end of the 5 years, you get your money back plus the 5% I paid you for a year for the last 5 years. That's the way they work. Or at the end of that 5 years, as opposed to calling and as well as to not calling the bond, but retiring the bond, I can issue a new bond at whatever the current interest rate is and continue to pay you in perpetuity, giving preferential treatment to those who, giving preferential treatment to those who are current investors. So all the people that bought my first issue at 5%, well, I got a new issue at 5.5%. You guys want it? Sure. We'll just roll it over and be done with it. Was not allowed to do that. The Russians weren't allowed to do that in 2015. They were completely cut off in dollar funding markets. It was the whole purpose of the sanctions was to try and destroy the Russian government and cause a ruble crisis and a currency crisis that would take down the Russian government. Well, I got news for you. Similar situation was going on in Turkey, but they never figured that they would actually have to sanction Turkey and cut it off from dollar funding markets because Turkey's position was actually weaker than Russia's was. Okay. The problem was that at the same time, it was also hurting European banks. So they really couldn't take Erdgoan down because if you took down all the the Turkish companies who owed all these dollars, you would have taken out all the Italian and French banks at the same time and precipitated the sovereign debt crisis. I wrote an article back then last year saying, is Turkey going to be ground zero in the U.S. dollar or the sovereign debt contagion, and whatever the hell the name of the article was. Basically, is this ground zero? Is Turkey going to be patient zero in the contagion effect of a global debt crisis? It's a fair question to ask, given the situation. Of course, once we hit our peak, published by Goldman Sachs on the day before it happened, of 7.1 on the lira, which I tweeted out and said, oh, by the way, go long the Turkish lira now because that's when Goldman's going long. Because Goldman publishes this report, puts it out on Zero Hedge, which says if the lira breaks through 7.1, the government's going to collapse. Guess what? It went to 7.15 that morning and then never traded anything close to that ever again. Because that's when Goldman reversed all its shorts and went long. They're trying to trap all the Muppets at the top of the market. Because that's what they do. Because they're Goldman and they're fucking evil. So, when you factor all of that stuff in, okay, and you understand what's happening at that level, okay, and you see all of this happening, it's obvious that they couldn't take Turkey down the same way. I also said this because of the potential contagion effect into Europe. And so eventually it had to back off. Eventually, Erdgoan gave back Pastor Brunson. Trump and he were mates for a couple of hours and everything stopped. Turkish lira has never gotten anywhere near 7.1 again. It may get that high again at some point in the near future as the current dollar bull market takes shape in a similar kind of, double top event, similar to what the Russian ruble did. The Russian ruble peaked in late November 2014. Then it relaxed, and then it spiked again as the oil prices collapsed again in January 2016, and then it's since fallen off since then. But the ruble will never get back anywhere close to the 80 level that it was trading at in late 2014 and early 2016. Never happened. Not going to happen again. Not with Russia's fiscal position. Not with Navalny refusing to lower interest rates below 7%. Insane. So I'm 20 minutes into this, and I haven't even gotten to my point yet, but I had to get to the history. because this stuff's important, that you get it and you understand it all. So that brings us to today, or it brings us to yesterday. Because since Erdgoan took over for the central bank, and the central bank of Turkey during the crisis raised interest rates to 30%. Erdgoan freaked out. Bitched his chief central banker out. Now, this is normal IMF policy, IMF style policy. You raise interest rates to get things under control and to encourage savings and to stop the capital flight, to create demand for the currency. But you have to understand something. During a crisis, raising interest rates that high doesn't, and holding them at that level, does not create confidence. What it creates is fear. It helps in the short term to stabilize the situation through shock and awe. But then after that, holding interest rates at a high level like that still continues to project fear, because you're saying, I need to create that level of return in order to get anybody to buy this garbage, because otherwise this currency is dead. The minute you start lowering rates, you're projecting confidence and strength to the market. Okay? Now, what normally happens during a situation like this is then the IMF comes in and says, hey, we'll give you a loan to shore up your position. We'll throw some money into your coffers to shore up your foreign exchange position so you'll be able to cover your debts. We'll talk to your creditors. We'll help you restructure everything. But the price of that will be the following. You will keep interest rates high. You will cut government spending. You will raise taxes in order to pay for the debt servicing and the loans that you just took from us. And you will do this until we tell you otherwise. Now, what does that actually do? Well, what it does is it actually puts the country on the financial equivalent of residual poison. If anybody's read Dune, you know exactly what I'm talking about. The residual poison is the kind of thing where you poison somebody and it sits dormant in their system as long as they keep getting an antidote on a regular basis. The minute they stop getting the antidote, they die. Right? Well, this is the same thing, except the drip feed here of antidote is that you continually have to pay the VIG on the loans that you got from the IMF. And that the whole point of the IMF bailout program, and like 1 out of 20 countries who go into one of these programs actually comes out the other side in good shape, mostly because they don't contradict or contravene U.S. geopolitical imperatives. Now, what happens to the country at that point is that they're stuck in this vicious cycle of high interest rates stifling capital growth. Fuck off, France. I know you're trying to make me, I know you're trying to get me off kilter. Not going to work tonight. So one, it makes it puts the country in an austerity vicious cycle of high interest rates, stifling capital creation, stifling credit creation locally in the local currency. The local currency remains weak. Savings in the local currency goes through the freaking roof because everybody goes, I remember talking to my friend in Vietnam back in 2013. He's like, dude, I get paid in dong. I spend all my dollars and I get 13% on my money in dong. It's ridiculous. I can get 1% on my dollars. I spend my dollars, which is exactly what the IMF and the United States wants. They want the dollar circulating locally in countries like Turkey and Kazakhstan and Singapore and wherever else. They don't want the local currency circulating because the local currency circulates. The dollar has no power there. So you keep the interest rate differential high in order to put incipient inflation and stuff the banks full of incipient hyperinflation. When they finally do lower interest rates, all that money comes flooding out, and the currency gets overwhelmed in supply. You destroy demand for the currency while inflating its supply, but sterilizing it in the form of savings, and then eventually all that money comes flooding back into the market, and then you get cost push inflation as opposed to demand pull. It's fucking evil. So you get no credit creation because domestic currency rates are insane, so small and medium businesses cannot grow. Okay, you keep demand for foreign currency at i.e. the dollar, at a high level because the dollar is stable, the local currency is not. People continue to borrow in the local currency, in dollars, which has a lower interest rate, much lower interest rate, borrowing rate than the local currency. It's and the government's cut spending, so now you've got all these new people that you've had add people to the unemployment rolls. 3, and you raise taxes at the same time in order to pay for the frickin' VIG on the loan. Why does anybody think that a country will be able to grow their way out of this bullshit? Why does anybody ever sign up for it? The reason why they always sign up for it is because the government doesn't see a way out of the situation and they want to stay in power, because you can always count, or at least they think they can always count on corrupting the man in power, because it's easier to corrupt one guy than it is to corrupt everybody. You can corrupt one guy with power, that's easy. I want to stay in power. How do I do that? Well, I take this loan from the IMF and I fuck my people over. Hi, my name is Alexis Tsipras. Hi, my name is Luigi Di Maio. Hi, my name is the rest of these stupid motherfuckers that have ever taken one of these fucking loans. CF Argentina. Now Argentina keeps doing this shit, and every 5 years they just friggin' default, and they make people like Paul Singer go friggin' nuts because Paul Singer keeps trying to buy the fucking bonds at the bottom, go to a New York judge and try to get paid by the new Argentina government at par. Fuck that motherfucker. Screw that guy. Fuck him and his fucking asshole. It's an unbelievable amount of chutzpah, and I use that word specifically, that assholes like him use in order to try and make billions off the back of fucking people whose lives they've literally destroyed. So here's Erdogan, the evil dictator Erdogan, looks this entire situation over, and at the height of the lira crisis says, fuck the IMF, I will never take a dollar from them. Literally said, I mean, the man could not have said, fuck the IMF clearer than he said. It's like, I'm not doing that. But how are you going to get out of it? I mean, and talking heads on Bloomberg are all like, how is he going to do this? I don't understand. It's not going to work. Turkey's really screwed. Everybody's like, and the piling on, and the piling on, and the piling on. And Zero Hedge gets into this shit. It's fucking retarded. And I'm like, no, he's doing exactly what he needs to do here. Is to say no and take the pill. He's in a strong enough position politically, the same way that Putin was in a strong enough position politically to weather 15, 18, 20% inflation for a year. Allow the currency to collapse. Behind the scenes, start swapping the dollar-denominated corporate debt for lira-denominated corporate debt at a slightly higher interest rate. But so what? It's still less than what they're paying in the spot market on this. So that's fine. Get that done. And get the demand for dollars out of the Turkish economy. What needs to be wrung out of the Turkish economy is not inflation, it's the demand for dollars. That's what needs to be done. China comes in with some loans, they make some investments, and they make investments in local currency. Qatar does the same thing. The Russians do the same thing. The Russians and the Turks do bilateral trade for energy, but they don't use dollars for it. And if they do, maybe the Russians pay in dollars that they've earned, funneling dollars into Turkey. The same thing with China, funneling dollars into Turkey to pay off these debts, get that stuff under control, swap that stuff out for lira-denominated debt. Erdogan threatens the central banker multiple times and then finally just fires the guy and lowers interest rates from 30% to 24% immediately. And then he goes from 24% down to 20% a couple months later. The other day, he went from 20%. Yesterday, he went from 20% down to 16.5%. Basically, as inflation starts to come down, he's just leaving Zero Hedge noted it as like a 1.5% positive yield over inflation. And the inflation rate is coming down, and it will come down. It's not going to be easy. Turkish savers are going to get wiped out. You can't get away from it. You can't ignore or wish away the effects of a debt-fueled boom. Austrian Economics 101, baby. Got news for you. You got to take the pill. But if you take the pill now and you get through it now, you won't be on the fucking debt treadmill for the next 30 years, putting your grandchildren in the debtor's prison to the IMF. Fuck those people. Take the fucking hit. do it. And that's exactly what Erdgoan's doing. He's also, at the same time, he's also proving beyond a shadow of a doubt that the ivory tower intellectual philosopher king motherfuckers who are supposedly are the smartest guys in the world, who run the world and run the economies of the world, all the central bankers and all the wise and insouciant economists like Larry Summers and the rest of them, they all know exactly what's going on. These arrogant, obnoxious, effete fucking sons of bitches who've never worked a day in their freaking life, or never traded a bond, or never traded a goddamn stock. Not one of those know what the fuck they're talking about. They all live in a fucking ivory tower, sniffing their own fucking assholes and telling themselves that their farts don't stink. Bullshit. These motherfuckers are all being outed as exactly what they are. Out of touch, out of date, and without any, and their theories have no basis and merit whatsoever. Erdgoan, who is not an economist, is doing a better job of running Turkey's economy than his central bankers and his economists, all of whom were trained by the IMF and inserted by the IMF to run their world. It destroys the whole friggin' progressive meme that we can engineer a better world. That social engineering is the way forward. This is the lesson that everybody's learning today, because Mario Draghi yesterday came out with his last statement and his last decision as ECB president, and all the time that he's been in charge, came out and basically said, well, everything that we've done for the last 10 years hasn't worked, so we're going to do more of it. We're going to do more of it. This is what Turkey being, I'm going to be right about Turkey being patient zero for the sovereign debt crisis, but for the wrong reasons. It's not because of the Turkish denominated debt. That's Turkish dollar denominated debt. It's going to be because Erdgoan, of all freaking people, is going to turn out to be the smartest fucking central banker in the world. I'm going to say that again and then pause for 10 seconds. Erdgoan is going to wind up looking like the smartest central banker in the frickin' world. Not Mario Draghi, not Kuroda, not Jay Powell, not Christine Lagarde. Erdgoan. I couldn't have written this script if I wanted to. I got Nabolino over in the Bank of Russia playing the same frickin' game that the guy in Turkey tried to play, or slow walking the fucking, no, I don't know, we should really hold interest rates at 10%, Vladimir. Lower fucking interest rates or you're going to the gulag. Okay, boom. And then they got dropped by half a percent. That was May of 2018 or 2017. I remember this clear as day, guys. And you know what the proof is that I'm right about this? After Turkey announced that they lowered interest rates, what happened to the lira? Three guesses. Three guesses, and there were only two possible answers. Did it go up or did it go down? Did it devalue or did it appreciate in value? Didn't devalue. It went up. Guess what happened to Draghi yesterday? Yeah, the lira appreciated. Why? Because at lowering interest rates, all of a sudden there's actual marginal demand for Turkish lira at 16.5% was now allowed to express itself in the market. There was demand for lira all of a sudden. People were like, wow, maybe things are in better shape than I thought they were. Maybe I can get that short-term loan I need to put a new sidewalk in front of my building, because I really need to do that, because people are stepping in that fucking hole out front and they don't want to come into my fucking store. But if I take out a short-term loan to get the concrete guys in here to build a new freaking sidewalk, maybe I can get some fucking business. Yeah, I think that's worth 16.5%. The guy wasn't doing that when it was at 20%. Now he's doing it at 16. It's a little thing. Yeah, I mean, interest rates have to get to 7 to start building freaking factories or anything, but let's let's not put the cart before the horse. Turkey's got a lot of work to do before they get to the point where they can do that. Okay? But that's what's going on. What happened to Mario Draghi yesterday? He tried to throw the QE bazooka at the euro. The euro was supposed to should have collapsed under those circumstances. What happened to the euro? Bond yields were supposed to go low, even more negative, because Draghi lowered rates. Draghi said, I'm going to buy more debt. Please front run my... Please, Momo monkeys, continue to front run my idiotic goddamned policy. What happened? I'll show you what happened. I'm going to show you the German 10-year bond. Okay? I'm going to show you. You guys are going to love this shit. And we are live. And there it is. Hey, look at that bar right there. I can't really go in any closer than that, but this is the German 10-year bond. Now look at this shit. Now this is yield. So the lower the yield, the higher the price on the bond, which means, of course, that there's been demand for German 10 years. There's been this mother of all safe haven trades. And then we got a massive, massive reversal bar. I got news for you. FYI, that's the weekly chart. That's almost all yesterday, that move higher. Okay? There's the 1 month. There's the monthly bar. We're going to throw a reversal this month. Mostly on the back of Mario Draghi. Oh, by the way, the euro went up. So, what happened? The market called Draghi's bluff. The market looked at that shit and went, you're so full of shit, you know what the hell you're talking about. They all woke up and went, what the fuck are we doing buying German 10 years at minus 1%? Fuck we doing? Germany's in a recession. And all of a sudden, clarity begins to come into the world. And everybody wakes up from the noise and the crazy, and they go, maybe these guys are just stupid. Maybe they just don't know what the fuck they're doing. I mean, all these theories sound good, but why are we still doing this if this shit was supposed to work? Draghi literally came out and said, negative interest rates are here to stay. They are an absolute necessity of modern monetary policy in order for us to get out of this crisis. Are you out of your fucking mind, dude? No, the reason that Mario Draghi is doing that is because he's paving the way for open monetization of all the European debt in order to consolidate all the debt under one rubric, otherwise known as the ECB. I mean, I know what he's trying to do here, and I know what's going to happen under Christine Lagarde, and I know what's going to happen under whoever decides to get the tap to replace her at the ECB, which most likely will be Mario Draghi. They got to keep this thing going somehow. Meanwhile, in Istanbul, not Constantinople, Erdgoan is running the Russian script for de-dollarizing the Turkish economy. And the minute he's about 2 or 3 years, he's a couple of years behind the Russians. So he's about where the Russians were in late 2015. So he's got another couple of years. If he doesn't do the Nabalina thing, which is to slow walk those interest rates down, trying to sabotage the Russian recovery because she's actually a fifth columnist working for the fucking EU and the fucking Western oligarchs, which is what I think is going on, and Putin just can't fire her because of other reasons that I don't know. But I'm convinced that it's something along those lines, or Putin is slowly but surely changing her mind the same way that he's changed the mind of like Dmitry Medvedev and the rest of them who are like, yeah, really, Europe's bad. We don't want to be a part of those fucking people. And they just had to they grew up with one mindset, and then their mindset has to be physically changed by circumstance and by experience. And I think that's the game Putin's playing with people like Medvedev and Nabalina and others. And Kudrin and a couple others. That's what I think is going on. And for those of you who know Russian politics as well as I do, you know the people I'm talking about here. So what I think that's what's happening. And so Erdogan and Turkey could easily be, frankly, could be a long play by the end of next year, if you want my honest opinion. But there you go. So if confidence gets lost in these people, and remember, Donald Trump is attacking the Fed chairman every day to do exactly what Draghi just did. Do you not see the setup here? I mean, this is the best live stream on the internet because you'll never hear this from anybody else. Honestly, I shouldn't give this shit away for free. I don't know what the hell I'm doing. But it is what it is. All right, I'm going to open up to some of the comments because I just saw one from Stoyanovich that's a good one, which is perhaps Russia prefers slower growth and no accumulation of debt over fast growth. I'm not talking about fast growth here, Stoyanovich. The Russian economy has multiple times over the course of the last 3 years, thanks to Nabiulina, not been able to get away from 1% a year growth. And is starting to slip back into recession because because interest rates are so high. Domestic borrowing for small and medium businesses and cannot happen. You're talking about mortgages at 10 and 11%. Okay, these are not, and this is not sustainable. This is not going to create a virtuous credit cycle, and there's nothing wrong with a virtuous phase of the credit cycle. Like Nabiulina is running monetary policy as if it's not ever good to have a virtuous credit cycle. Now, one could argue that the Russians have been traumatized by the ruble crisis of '99 and this and all these things, and I get it. And I'm willing to be generous. But Austrian business cycle theory will tell you that the problem here is central banks in general. Normally, they're below the number. Normally, they lower rates below the real rate of interest, the real rate of interest, which is the risk assessment for investing. Whatever that number is. And of course, that number is different for different types of investments. But, for 2-year time horizon investment, whatever that number is, say it's 6%. Probably more like 3. But let's say for a 10-year time horizon investment, say 6%. 6% on the 10-year seems reasonable. Just in general, maybe 7, maybe 5. Let's just call it 6 for this example. The state of the economy today, somewhere around 6%. And invariably, what the central banks will do in order to boost growth and boost government receipts and everything else, because government spent beyond their means, they'll lower it to 5.5% or 5% to try and boost the economy and try and get more money into the system and stimulate GDP growth and stimulate spending. Remember, like I said, it doesn't matter. GDP doesn't give a shit about the quality of said spending, just that it occurred. But the opposite is also true, that a central bank that holds the interest rate above the market's desired return level, what the market actually wants to buy debt at, is also bad because that stifles much needed investment and demanded investment by the economy, by the people in the economy, into the economy. Okay? It's just as bad. It's just as pernicious. It's just as terrible. Okay? It's just as bad. But 9 times out of 10 or 99 times out of 100, the central bank will be below the target interest rate, the equilibrium. I hate to use the word equilibrium interest rate, but natural interest rate is I think what guys like Bob Wenzel and others will call it, and Bob Murphy and others will call it, is that the natural rate of interest, whatever that happens to be. When nobody knows what that number is because the market is never allowed to seek that level because the central banks always intervene. But that number exists, okay? That would adequately balance everybody's risk assessment. Risk profiles. It's there. It exists theoretically. If you're above it, you're stifling growth. And if you're below it, you're over accelerating growth, and you're eventually going to run out of bricks, and the master builder will have to tear the house down and start all over again. CF Mises. But the other one happens as well, which is that the economy doesn't produce enough bricks, and people then actually fucking starve, and that's just as bad. Okay? And the proof of that is when the central bank lowers rates, the currency appreciates, and the yield curve normalizes. I'll show you the Russian yield curve to prove my point. Okay, and you'll understand what I'm talking about the minute I gave you the Russian yield curve. And I showed this in my most recent article. It's better to show you. Yeah, there it is. I'll just have to do it this way. Okay. I'm gonna have to just show you the numbers because it's better to show you the numbers than to show you a chart. Get big. Go back to the desktop. Okay. I don't know if you guys can see that or not, but I'm gonna try and come in here. You can see in the overnight markets, we're talking about 6.84%, 6.85. It's all in this range. It drops all the way out, and all the way out to 6 months, it stays around 6.85. By the way, the Russian benchmark rate is 7.25%. So the actual markets, the actual interbank markets, are trading 0.4% below what they can get from the discount window at the Bank of Russia. Now you go, and now that's all the interbank market stuff. In the Russian market, everything under a year's maturity is the interbank market. Now, because they don't actually issue 6-month debt. Now, that's what this is. Now, this is the actual Russian yield curve, and you'll notice that it's normal and upsloping, starting at 6.85%, 6.58%, and now moving all the way up to 7.43%, and it's upwardly sloping in that every year, the farther you go out in time, the higher the rate is, which is exactly normal. The Russian yield curve, the Russian market for government debt is normal. And yet Nabiulina won't fucking lower interest rates. Putin had to threaten her 2 months ago to get her to lower interest rates from 7.75% when the markets were screaming for her to cut rates. So I want you to understand that, and to Brett Harris's point about what Wikipedia says, according to the Constitution, it is an independent entity, primary responsibility of protecting the stability of the national currency, the ruble. I know, and Nabiulina uses IMF inflation targeting dogma to try and achieve that goal. That goal is nonsense, and it's terrible. It's also not true. Because what's price stability? She's defined it as a 4% inflation rate. So I understand the worry here. What I'm telling you is that the Russian economy would grow at a very healthy 3 to 4% very quickly if she would lower rates by anywhere from 0.5 point to 0.75 point. I want her at 6%. I wanted her 6.5% last year. So if you needed to raise the rates to 7% in order to offset Trump's trade war, she still have room to cut down to 6%, which is about where she needs to be. And I think she needs to be anyway. So, don't get me wrong here. I'm not saying that she needs to go fucking 2% or anything. I'm not saying she needs to be at 6%. And I got news for you. At 6%, she's telling everybody she's not fearful. Money would flood into Russia. Would flood into Russia at those levels. Because at 7.5%, people are looking at it going, what the fuck is she afraid of? All right, I know there's been a bunch of comments tonight. I haven't looked at any of them because, I was on a 45-minute rant that I really needed to get through. But this is very important. I'm gonna write this up as a total blog post tomorrow. It's really important. Probably link this live stream, or at least the first half of it, before I started, screaming, fuck. So, there you go. That's my spiel for tonight, guys. I mean, to be honest with you, I don't really have anything else to say. I don't really think I should say anything else. But it's really important. And a couple other things. One last point to make is I don't see Jerome Powell as a strong Paul Volcker to stand up to Donald Trump. I don't see that happening. Paul Volcker and Reagan, by the way, were in cahoots. They both agreed on the policy of raising interest rates, jacking the prime rate to 21%, selling 30-year government bonds at 13% coupons. You imagine getting 13% money on a 30-year bond? No, Putin never cut spending or development. Of course not. He didn't need to. He's flush with cash. They're running a primary budget surplus that Right, he's running a positive budgetary surplus, for Christ's sake. I wish he would cut taxes. Honestly. And he has in some areas, but I really wish Putin would cut taxes. I mean, don't get me wrong. There's a lot. I have plenty of things to criticize the Russian state over how they're running things, but relative to everybody else, the Russian state, these guys look like freaking geniuses. I mean, these guys look like the board of Apple, for Christ's sake, in the way they handle their fiscal, they do their fiscal management. It's freaking ridiculous compared to every other country in the world. Yeah, Storiano was just asking, so that helps personal savings? Yes, that is but there's a point. There's two other things that I want you to think about. I know you don't really quite understand this stuff the way I do, and it's why you're asking these questions and spurring conversation. So I'm going to try and answer this in another way. When you raise interest rates drastically during a currency crisis, it is to shore up the banks through the attraction of reserves, because when banks need reserves, they raise the offered rate on savings, right? So if banks are a little over leveraged and maybe some of their loans are starting to go bad, they'll inch up their savings rates in order to get people to put money away and save, right? That's when they'll start offering, and better, they may even offer above the discount rate or the official savings rate. In Vietnam, for example, not only does the SBV, State Bank of Vietnam, not only does it publish the borrowing rate, it also publishes the savings rate, the official minimum savings rate, or maximum savings rate. One of the I think it's minimum savings rate. Because they're communist, because they're still nominally communist and they're stupid. I'm not saying that the State Bank of Vietnam is competent, because it's not. But there they set a price for that, say 10%. We're going to leave it at 10%. But banks can offer more than that. If they offer more than that, that's a statement by banks that their capital positions are really tenuous and they're in distress. When banks start offering high overnight and high 1 month and 2 month and 3 month rates, those short-term rates start to rise, and you get the yield curve. I'm gonna have to try and do this right. The yield curve does that, right? It starts high at the overnight rate and then drops down to a minimum, or maybe at the 6 month rate, and then starts to go higher. That's and the German yield curve, by the way, looks like that. When that happens, and the American yield curve has looked like that. When that happens, that's a measure of stress in the system. When the offered savings rate is above the benchmark rate, and the short-term savings rates are higher than the longer-term savings rates, that's a bad sign. That's a dysfunctional market. So it's very important that these things get balanced properly, that you have an upwardly sloping yield curve. Okay, it's very important that the yield curve start here and go up through time. It just has to be. Okay. That's a perfectly functional economy. And when you have what you have in the Russian economy, which is, it looks like this, that's terrible. That means that the central bank is stifling growth. They can cut interest rates she could cut rates by a full point tomorrow. And all that would happen is that the Russian economy would take off like a shot. Yeah, maybe for a couple months inflation might be a little bit above her target. So the fuck what? But what she's doing, and this is important to note also, when the savings rate is that, when the benchmark rate is that high, she's actually creating M1 at that rate. Because most of that money goes into savings and it doesn't circulate. So it's rising at the coupon rate that she's paying. She's hyperinflating. She's inflating an economy that, at the money supply level, the base money level, that she doesn't need to be doing. So that when she does lower rates, it's going to cause an explosion, because she's not going to be able to take that money off the market, because she printed it in the form of actual savings. It's not credit that can be contracted or expanded at will. This is base money. She's creating high-powered base money when she does shit like that. She's creating M1. No, she's creating M2. She's creating savings, right? M0 is is base money. And is basically the central bank's balance sheet. And then M1 is that plus checkable deposits. No time, on-demand deposits. No, they're not saved. There's no time function associated with them. It's basically savings accounts. Or not savings accounts, checking accounts. And then M2 adds savings accounts. And the definitions of these are fungible depending on the country and depending on but in general, M0 is the central bank's balance sheet. M1 is that plus checkable deposits, and M2 is that plus savings, and M3 is that plus credit. Okay, that's the general rule. Not a big fan of that. I'm a much bigger fan of. And then there's MZM, which is money of zero maturity, which is a slight variation on M1. And then there's the Austrian true money supply, which is completely different and probably more accurate. So, it's frustrating it's frustrating when people to talk about this stuff when people just don't understand it, and you're trying to explain it. And don't get me wrong, I don't mind explaining it, but it's very obvious that the people who are in the know, the people who are managing billions of dollars out there, don't know the shit that I just told you. They're as miseducated as the central bankers are. That's the point. These people actually believe this shit. Go read Bill Blaine's freaking morning porridge from this morning about how Mario Draghi just told everybody to go long the euro and how it's going to be great, that he's basically unleashed MMT on the freaking world, and we're gonna and everybody's gonna fart fucking unicorn rainbows, for Christ's sake. I'm like, are you out of your mind? But it's Bill Blaine, and that's what he wants. And he's a miseducated fucking limey, and there's nothing you can do about it until the whole thing collapses, and then the ECB has to be bailed out by the IMF. This is what's coming. All right, guys. I'm good. 57 minutes. I don't know that there's anything else we really need to talk about. There is no Brexit update for right now. Does not matter. Boris Johnson has it all under control. I'm firmly convinced, Jonathan. And I think I know why. And it was posted on our Slack server today. Better if they were to fart cute goats. I agree. Because unicorn rainbows suck balls. Quinn says, short me some barley. There you go. All right. FYI, so for those of you who are part of the group, I'm going to be getting off here and logging into World of Warcraft in just a couple minutes. We're going to run Black Fathom Deeps tonight. I am not going to stream that run. For those of you who are interested in watching us freaking play World of Warcraft, that's not going to happen, though I may do this one of these days. But we are getting to that point. So we're going to do that tonight. It's going to be fun. It's going to be real. And then that's that. Tomorrow I'll write up the blog post, and then we'll go from there. So you guys have a great evening. If you liked what you heard tonight, please give a like and subscribe down below. Make sure you tweet, share, like, do the thing, do the business. And if you need to feel the need that the information that I give out to you is worth your time or your money, you can always go over to Patreon, become a subscriber, subscribe to the newsletter, where I kind of wrap all this stuff up into a cogent investment thesis, as well as give you unique commentary on the state of specific companies and specific markets, as well as there's always ways to donate directly, either through Brave by installing Brave through the code that I have down below in the links. I'll get a $5 kickback from them. You should use Brave. It's actually an excellent browser, on top of the fact that you can earn money for watching and support content creators that you love, like myself, because I know you all do. And then there's PayPal and crypto and all the other ways you can donate as well. So I appreciate your time. As always, you guys are fantastic. Not much interaction tonight because, well, I had a lot to talk about. You guys take care. You be well. Have a great weekend. Keep your stick on the ice.